Hey traders, Raghee here. Be nice if I remove the lens cap. There we go. Welcome to Charts and Coffee. Hope everyone's having a great morning. And we are going to kick off our discussion here of today's trading session with Jerome Powell. There's two hot zones today with Powell, and one is at 11. The other is at 2. That is today's narrative. Yes, it's the first trading day of December. Awesome. Happy December, everybody. And yes, we're going to be now venturing into the window dressing part of the year, also the tax loss harvesting part of the year. But ultimately, what we're really going to be dealing with is a lot of what I believe to be bullishness based on the criteria we've been talking about for some time. Are we going to see strength getting stronger? That's window dressing, gang. Putting the best things out in the window. So as people are walking by, they're saying, oh, I want to walk into that shop, right? That's window dressing. So what already looks good, buy it, right? This is not the bargain hunting time of year. And then things that don't look so good, that's what gets dumped. That's what gets put in the back of the store, back in the closet, back in storage, right? And that's essentially what December is really all about. Now, January will be something completely different. But ultimately, we got to accept that window dressing is the reality, and we'll function with that going forward. And until we get to the first quarter of 2024, that's when sector rotation. We'll talk a lot more about that in January. We'll talk more about how to capitalize on that, but it's too soon, right? Now it's a matter of October, November. What was weak in October at that October year end, and then what's been strong through October, November, what's up on the year. If you checked out the video that I did on Tuesday, we got into a lot of detail on that, not only on Tuesday, but my Sector Secrets Mastery folks, we got into a lot of detail on that sector reality. What is outperforming on the year? What is the top 4? What is the bottom 4? And understanding how they're going to continue in those trends. So check that out. We've got the roadmap laid out. And like I said, the Bob's barricade in the way today will be Jerome. So as always, gang, questions are the best part of our show. Feel free to type them on in, and let's kick it off with, all right, D. Bolton asks, would I consider a swing valid, so swing trade, overnight trade, typically on a 1 hour or daily time frame? Would I consider a swing valid on a daily price movement range pullback on the Magnificent Six? Yes, that's what I've started calling the Magnificent Seven, because one of them is not so magnificent. For those of you that are wondering, what is that Magnificent Seven? It's the top 2 or 1 weighted stock in technology, communication, consumer discretionary, and semiconductors. That's Apple, that's Microsoft, that's Meta, that's Google, that's Amazon, Tesla, and Nvidia. Now, one of them is not as magnificent, and it's the one that has yet to really organize into an uptrend, has yet to really conquer and accelerate higher through the 200 exponential moving average, and that's Tesla. Tesla still is sort of spinning its wheels. And if you checked out Tuesday's video, for those of you that love to trade Tesla, I know there's a lot of folks that love to trade this name, but we have to treat it for what it is, which is, it's been in a downtrend for some time. This is unique amongst Magnificent Seven, or as I like to call 6, because I'm omitting Tesla. This is unique amongst the magnificent stocks because none of the other 6 were in downtrends. All of them are in varying degrees of uptrends or neutral, and then uptrends again. So this keeps this a little separate. And then if I take a look at the fact that this has been in chop. Now, for those of you that are wondering, okay, Rock, how would I take all the colors and all the little zones and clouds on your screen and figure out what to do with Tesla? I won't just tell you what to do now, although I'm happy to do that. Let me show you how it works. If I'm in an environment that's red trend, so now I've got a red color at the lower part of my screen, This is how you trade Tesla from, and I'll get specific. Go take a look at your charts from October 26 to October 1/4. November 1/4. So the 26th through the 14th, red trend being below the 200 means when price hits the gold zone, buy puts or short the stock if that's the way you roll. Once we get above the 200, now we're in the bullish hemisphere. And yes, the gold zone is still there, but my directional bias turns bullish. And that means as we get above the 200, not so coincidentally, we went yellow. All right, Rog, what does that mean? That means now we're neutral. But if I'm above the 200 and neutral, I'd rather be a buyer. So every time we hit the gray zone, right, or even the 200 for that matter, but every time we hit the gray zone, 17th, I think we tagged it on the 21st, tagged it again on the 22nd, on the 28th. Those specific days, you look to buy calls. And not just buying calls because it got down into the gray zone, but because it's neutral. And you have to buy the calls in the gray zone. That's the value of having the daily price movement range on your screen, because now you know what's my trigger when price is in that gray zone. So the next thing is either wait for price to come back down to the 200 or wait for price to get in the gray zone. So there's no trade right now, right? You see the move higher, it pulls back, and then that's going to be the trigger. So that's the least magnificent, but probably the stock that I get the most questions about. The most magnificent, Microsoft, Amazon, Meta. So, ultimately, yeah, in everything but Tesla. Debolted, yeah. So the underlying structure matters a lot. Now look at the underlying structure of Microsoft. This is all sorts of tall and awesome. And it has been since the 17th of November. And really you might say, okay, Rog, how long has this thing been above the 200? Oh, pretty much all year long, right? So ask yourself, if I'm going to focus on one side or the other, and I'm not a fan of, well, I could be long or short, right? Remember, gang, there's two ways to trade a trend. One way is, and there's nothing wrong with either, but I'll tell you which I prefer. One is, well, let's try to find those inflection points, which is little moves to the downside like this. A lot of folks like to take advantage of the reversal within the context of the trend. That's not my cup of tea, although a lot of folks like to do that, and they'll take these tiny little moves and, hey, whatever works for whomever, yes? But then I ask myself, once I get above the 200, and you'll see this on example after example after example on the daily time frame, why not just focus on buying above it? A lot more upside, a lot less risk, a lot less confusion, and a lot less of trying to pick a top within the context of something that is clearly moving higher. So there's two ways of looking at trends. Those folks that like to find opportunity in the retracement or the mean reversion, which is fine. I think that's a lot more work versus, hey, if that's the flow of the river, let's just find a point at which we can jump on. That would be the gray zone of the daily price movement range. So there's a couple different examples, D. Bolton, on what we're doing and how I like to do it. All right, next up, Stanley asks, good morning. What are my thoughts on CRWD? Well, my thoughts are only going to be what is the structure, and then how can I jump in within the context of the structure. This is an accelerated uptrend, Stanley, so there's no harm in clearly looking bullishly. But I think, again, let's use the same process that I just used for Microsoft and or Tesla. And remember that it's not about CRWD, but rather the structure and what the tools are telling us. So by May, it's really long only for me. When we're in these green zones, that's straight up buy the dip, right? And we're in that buy the dip environment because bullish momentum, bullish trend. Now, what's going to be the dip? It could be a mean reversion into the 34 EMA wave. That's one way to do it. It could be a pullback to a Darvis level. It could be, if you like, retracements to a 21 EMA. If you like retracements of the last major move of a 50%, what I like to call a pingala, you can do that. But really, I would say what happens in an environment like this, after especially a big candle or a gap, like we saw the big candle on the 29th, or the gap from the 28th to the 29th, traders start to buy into higher highs. So let me ask you, would you rather chase, and this is up to everyone, you tell me, I'll show you the structure. Once we're in a green trend, I don't like to buy momentum breakouts. That's just not my cup of tea. However, once we're in a green environment like this, and I can see where the Darvis levels are, clearly there's a momentum break when we take out that level. I'd far prefer to be in a move like that, right, than chase something up at higher highs. So you might say, Rog, so that means we either need to form another Darvis channel like this, yes, or we need to pull back, right? So either we need to consolidate and then break out again, or we need to correct and continue. I like the latter. I'm a bigger fan of correcting and continuing. And again, it's not a matter of right or wrong. It's just a matter of how it is you want to navigate through this market, through this world of trading that we love so much. All right, moving on. Munair asks, could I explain the anchored VWAP that I would use on the 1 hour time frame on Starbucks? Also the reasons you were going back 1 year on the anchored VWAP. So Munair, I appreciate the question. That's what I use. I use 1 year because it's a psychologically relevant thing. I've tested it, right? Anything that I'm going to share with you all, rather than get into the minutia of why, I'd rather focus on the what. And when I look back on a year, we remember what happened in 2023, or we remember what happened 12 months ago. So it's really up to you. I like focusing on the year. As far as a 1 hour, I'll tell you, Munair, I don't do a lot of volume work on a 1 hour that I would say wouldn't be relevant based on looking at the daily and then applying it to the 1 hour. So I don't actually do a lot of anchoring on the 1 hour. We can go back 2 weeks. I find the market memory is about 2 weeks. And basically, as far as what I would use, maybe 2 weeks on the 1 hour. As far as a reason, that's what works for me. All right. What sort of expiration should we use for swings? Dave, it depends on the time frame. So kind of going back to Munair's question, if I'm going to do a swing on a 1 hour time frame, and if I'm going to do a swing on a daily, depends on the market structure. If I'm in a sideways market, I'm not going to expect as much follow through. Therefore, I don't need as much time to expiration. On a 1 hour, I also have a shorter time horizon or shelf life for how long I may be in the trade. 1 hour is simply just going to be very likely a shorter period of time with the open trade, right? While a daily will be likely a longer period of time. So to adjust for that, I want more time on a daily chart setup than I would a 1 hour. And then also, I want more time on a trending setup on a 1 hour or a daily than I would a choppy. So it really depends on the structure and the time frame. And the more that I'm on a longer time frame, the more that I've got a trending structure, I want absolutely more time. All right, will we see rotation to small caps in December, Dave? Again, based on typical December strength gets stronger, no. Let's see, what are my thoughts on Nvidia? All right, in terms of Nvidia, again, one of the Magnificent Seven that I think is actually magnificent. I've been calling it the Magnificent Six. Very volatile. But let me show you something here, gang. Let's take a look at the year, because at the end of the year, we have the luxury of looking back on our trades, and now we have the luxury of looking back and having about as 20/20 hindsight as we can possibly get. So, kind of going back to say Dave's question, and we'll juxtapose Nvidia with the Russell, right? So we'll look at NVDA. We'll take a look at IWM. All right. So if I'm taking a look at NVDA, in the very beginning of the year, we were not in a trend, and we were not above the 200. So leave it on it's okay to say I'm not going to trade Nvidia until certain criteria are met. So once we get above the 200, bullish hemisphere. Okay. Once we get above the 200, I'm focusing on the gray zone of the daily price movement range, which, by the way, gang, if you have not either signed up, extended, whatever it is that you wanted to do with your subscription to the daily price movement range, which is the gray and gold zone on my screen, which I've been showing you how effectively it works in chop and in trend. Today's the last day for our, Cyber Monday, Black Friday, crazy sale of the year. right? So please take advantage of that because, like I say, every penny that you can save on your tools and your subscriptions is that much more you can put into your trading account. That's why I like to emphasize when we have a sale, when we have a class, it's disproportionate value. Save some money, put it in your trading account by taking advantage of the sale. HPMRs, DPMRs, the sector secrets mastery. All right. Anyway, so back to Nvidia. So once we get above the 200, and definitely once we start going green trend, which happened by the third week of January, by January 24, it's time to focus on the gray zone. Buy, or even the wave. That's a mean reversion. So gray zone of the daily price movement range or the wave, and that pretty much was consistent until I'll give you specifically the date because that's the accuracy with which we can say what our strategy should be and then what set of tools we should use. And that means now I'm going to look at come August 10, I've got to rely on a slow stochastic more. I've got to rely on being long, but not as aggressively as I would or could in the context of the uptrend that we had, right? Probably the most difficult thing for traders to do is stop doing the thing that has worked when the market structure changes. And the problem is twofold. The problem is A, most traders don't know when the structure changes, and B, they don't know what to do if and when they actually know when it changes. And so here, this is when we adjust in the sector secrets mastery to slow stochastic, to more overbought, oversold strategies. And that's all predicated on that multi-trend, which, by the way, is included in the sector secrets mastery membership. We have a lot of cool tools that are included. All right. Well, then we had a little blip of green. Okay. That was a difficult environment, but we're still focusing on the long side, which I would say probabilistically worked better than not. But this was a difficult stretch between mid-August to end of November. That was a tough stretch. But now we're getting back into that green trend on the daily time frame of Nvidia, which means whether it's the 34 EMA wave or whether it's the daily price movement range, that's where the probability is. And I emphasize probability, gang. It's not certainty, because I want to point out nothing is right all the time. You'll notice I dipped on the 22nd. It hasn't followed through. So look, I'm not going to be one of those traders that say this works all the time. Nothing works all the time. But if you play the probabilities out, and if you play the path of least resistance, the directional bias out, at the end of the year, when you look back on your trades, you say, you know what? I didn't get suckered into thinking that there's a strategy that's infallible, right? I hate that, right? I'm never going to say everything works all the time because it doesn't, right? It's tempting to think there's a holy grail, but I'll tell you, gang, I've been looking for it like Indiana Jones. Yeah, there's no holy grail. So what we do is we play probabilities. And the probability is if Nvidia can get down into that gray zone, it's likely to bounce. And if we buy in that gray zone, we are not chasing Nvidia higher at a higher price, right? Now let's go back to Dave's question, which is what about small caps? Well, here's a problem with small caps. Small caps are not really significantly and convincingly above the 200. Small caps are even barely above where they started on the year. They're really vulnerable, right? So at the end of the year, do you window dress with small caps? Do you window dress with regional banks? Or do you window dress with the likes of Microsoft, Amazon, with Meta, with NASDAQ, with financials, with S&P? And then come Jan 1, when that's really more sector rotation, right? That's where these start to really become appealing, because now we've got 12 months to show performance, rather than telling a client at the end of the year, oh yeah, I scooped up things that should work next year. People don't want to hear that. Managing money is really difficult. I've done it for a brief period of time. It's the most thankless job ever, because when you make money, they go, well, yeah, that's what you're supposed to do. And when you lose money, they go, well, why are you losing money? Right? So it's a tough thing. So think about the psychology that these folks have to manage. That's what December is all about, gang. All right. So as always, thank you so much for being here for Charts and Coffee. And I'll see you on Sunday for our Top Tier Outlook show. All right, gang, be good to each other. I'll talk with you soon.